So it looks like the great housing freeze is slowly starting to thaw. You know, what's interesting is, as measured by mortgage applications, currently right now, the last 3 years have actually been worse than the great financial crisis, which is kind of fascinating to think about, that an industry as big as housing, mortgage, and real estate, that it could actually today be as safe, I guess you could say from a value perspective, as it is, yet from a transaction volume standpoint, it is worse than the financial crisis. And, you know, I have a lot of loan officers and real estate agents kind of reaching out and they're like, oh my God, when's it going to get better? And I'm like, well, it actually might not for a few more years. You see, in the financial crisis, there were lots of credit events, right? Bankruptcies, foreclosures, short sales, stuff like that. And every time there was a credit event, it would actually take someone out of the market for, let's say, 4 to 7 years, meaning they can't even get a loan, right, to buy a new house. So every sale ended up maybe pushing someone out 4, 5, 6, 7 years, whatever, before they could buy again. And what we noticed is that mortgage applications actually started falling from 2009 all the way till 2015. And then all of a sudden it started picking back up again. And then it ran all the way up into 2019 as interest rates kind of dropped again, took another little push higher. And then 2020, 2021, we obviously brought forward all kinds of demand with those low interest rates, right? And I've talked about that before, like even some properties where, let's say, there were 3 friends renting a 3-bedroom something, and then each one of them moved out and bought their own individual place because it was so affordable. So now we're dealing with the impacts of that, which is people are kind of stuck in their house, right? So it's no different than the financial crisis where someone bought, right, or there was a transaction, but now all of a sudden, because of that transaction, it's like freezing people in place for some extended duration of time that we just have to wait through, right? It just needs to be a natural, we have to wait, have people make more money, have people get a little bit more stability, whether it's their assets or their employment situation, things like that. They might just have families, sort of have kids, obviously need bigger places, move, relocations, things like that. So the market is starting to thaw in the sense that today in the DC metro area, at least, inventory is now higher this past week than it has been during any month in the last 5 years. So we're starting to see a little bit more activity from buyers seeing that they can maybe get some deals, maybe some price reductions, maybe some pricing concessions, but not everywhere, because I'm still also dealing with places where, you know, there's 2, 3 offers, it doesn't take many, and prices are escalating and people are giving away their firstborn and waiving all contingencies and stuff like that. So, but I just found that interesting that would you have guessed that it's worse today from a transaction volume standpoint than the financial crisis?